Hello everyone, Jared here from Crypto Exit Plan, and this is a little video to reinforce the reasons why I put the last video up, and that's why I sold my Workhorse, DHCP, LCA stock, or any other growth stock or any other SPAC stock that you think is going to go to the moon in a short period of time. And I'm going to explain why I've sold it and why I'll probably buy back into all of those stocks, and why it's a smart move not to get sucked into the hype, especially in YouTubers that tell you that these things are going up to the moon, or they're going here or there, or even if you're hearing analysts or you're on Seeking Alpha and people are saying my price prediction is X, Y, Z, because the stock market doesn't work that way. It does not go in a straight line, and it is not like you buy in at 15 and the next thing you know your stock's at 100 and you cash out and you walk away with that money. It is an emotional journey. The stock market is an emotional place. So this is why we need to think about the stock market like Wall Street does, like the big companies do, and especially the traders, because the traders are the ones that are manipulating these stocks. So we need to think like they do, and we need to decide whether we want to be in or out of that. And I've chosen to be out, and I'm going to explain why I've done that and where I've gone with my money in the meantime to get bigger gains until these other stocks that are going to grow and are going to fundamentally be great plays in the long term. But I just want to get away from all that BS, which is the stock market hype, the YouTube hype, and get in at a good price before the big move, when they're actually making profits like Tesla did. So we're going to have a look at Workhorse, Tesla, DHCP, just to really understand the kind of mentality from a technical perspective, not a fundamental perspective, as to why these stocks are kind of a waste of time if you're a buy and hold investor. Now, if you're a swing trader, they're a great stock, and I'll explain the two kind of scenarios, but let's just get right into the video now. So I've sold Workhorse, DHCP, and LCA recently. They were all my growth stock plays. Now, Workhorse I sold at a profit. I could have sold it for more, but I only sold it at a 30% profit from my $15 buy-in. DHCP I sold at a 25% loss, and DCA I sold at a 20% loss. I'm not claiming to be an expert here, but what I am going to claim in this video is that because we are not experts, because we are new to the stock market and new to investing, the emotional journey is somewhat challenging for us. And me selling these stocks is a way for me to get out of that volatility and out of that environment, and show you now what I have learned since I've learned a bit of technical ideas from trading and using trading view and seeing what is actually happening in a macro view in these stocks, and what the big players and the people that aren't paying capital gains tax on their trades are doing. This is why I'm getting out, and I'm going to show you why I will get in at a certain point and I will hold for a long term. I'm talking about why I sold these growth stocks or these SPAC stocks, because they're being completely manipulated, because they are low cap stocks, and they can be, and what I'm going into next, and more importantly, show you a little bit of history as to what happened to Tesla after all this manipulation played out in their early days. So we've just got to be careful in the stock market, and especially with YouTube and everyone hyping everything and FOMO and all these things, and you kind of end up buying high and selling low because you're totally out of sync with the market, because you're only listening to Twitter and YouTube and all these things going on. So what I'm trying to do is help you understand what I've just learned after 5 months of investing, and why I'm not playing these high growth stocks at this early stage in their careers. So before I get any further, and before I look into this deep dive analysis of why I have sold my Workhorse stock at not even the maximum profit that I could have sold it at, I'm going to ask you to like the channel. I'm going to ask you to subscribe, because I am about showing you something other than what other YouTube channels are showing you, of what stocks are great and what stocks to buy, and this cryptocurrency is going to go to there, and this one's going to 10,000 in the future. I'm not telling you any of that. I'm telling you to understand the volatility that you're playing. I'm telling you to understand why you're playing that volatility, and I'm telling you to understand what you want to do with your profits once that volatility has happened. and that you're going to get out at the right times, or in and out at the right times, to actually get the cash flow you need as a personal business to do what you want to do, whether that be to start a business, whether that be to save money for your future, whether that be to buy something really good that you couldn't afford otherwise. So really understand where your end goal is before you get into this market, before you get into any volatile market. Because if you just want to treat the stock market as a retirement fund, you may as well just buy Google, you may as well just buy Microsoft, you may as well just buy Facebook, and you may as well just buy Amazon as a long-term investment to retire on that fund and to sell those stocks when you're close to death and you want to go and travel the world, because that's about the safest thing you can do right now in the stock market, because those 4 companies will eventually increase their price over the next 10, 20, 50 years. All right, so getting into and starting with Workhorse. So let's assume, and let's assume that we bought this stock around the $5 mark. So I've got my kind of info line pegged around just under $5 there. And it took a really good run over, what was it, 12 bars. So it was over a 19-day period up to $20.72. Now that is a massive gain. That's a massive gain. You've got to understand how massive that is in the stock market. That is unrealistic. Now there's a reason for that. Workhorse is expected to get the UPS contract. So the first move they did was 320% move from, a fairly static up, down, up, down, up, down. Now there was some fair volatility here because I'm sure there was a lot of talk about who they are and what they were going to be. But, looking back to June 2019 on to April 20, there's not much going on this chart. But then bang, boom, 320%. Okay, great. So if you bought in here at $5, awesome. And there's YouTubers out there that did, and they're sitting pretty and they're telling you how great the Workhorse stock is. What is happening here right now? Wall Street knows this. Wall Street hears this. Wall Street watches YouTube and they go, great, so this has gone well above what it's worth. It will retrace. People would have bought in here and they'll take profits. Traders, anyone in the stock market is going to take some profits at this point. So what happens? They go down, and it gets down to a low here of 13.24%. So let's draw another info line. Let's say even if we bought in at, what do we say? Let's say we'll say around, around there, around the 1350. I can't get quite close enough there. But let's say we bought in here up to 19. Let's say the next swing we did was somewhere around here. So we bought in around that dip, and we sold here, and we bought in around that dip at 13 something, and we held for another 44 bars. So a bit of a longer hold there, but 121%. So we've taken some profits out here, we've let things settle, we've bought in again, and now we're gonna sell out again around the top here, around the $30 mark. So that's what Wall Street does. They can swing trade this. They might even be swing trading all the way through, but let's just say we're playing an average investor long-term swing trade. I want to make a bit of profit for myself while I'm holding some of this stock, or while I'm planning to eventually hold some of this stock. So we bought it up to 30. Now we sell again. And so what do we see? We see it dip again. So let's say we bought that dip, we'll buy somewhere in the middle of that move, and we could either go there, or maybe we hold a bit longer and we'll go somewhere in that move, because we've sussed it's gone down, gone up. No, actually, let's go back here. Let's say we bought this dip, another 30%. Now, I might just hide that one again, and then, so we've got another 30% out of it, and now we can go back here, and we've got, another 30%. And then we'll just hide that move again, and I'll zoom out just so I can actually put that peg on the chain there. But we're probably going to go somewhere like in the and let's predict this, maybe 32. Let's say we're going to go somewhere up here on the next move, because that'll be the next speculation of the UPS contract coming through. So you can see already, and if we zoom back out, that we've got a 320% move, a 121% move. We've had two 30% moves, and then maybe we're looking at another 100%, 200%. Who knows what the next move's going to be? Some people are saying the stock will go to 100. It's not going to stay there. But if we draw, and if we hide everything, and we draw a long-term trend line, we're going to see that, in general, the stock has been going like this, and that yes, it might boom up above 100 because that's what growth stocks do, but it's kind of going to bounce off this line, and eventually we're going to get to the same time next year, which is October next year, and we may be around 60 quid. We may be around $60 in this stock. So if that's what you wanted to do, if you wanted to buy at $5 and have $65 in your bank account, great. But this is the thing, Wall Street doesn't think that way. Wall Street thinks in money in the short term. They're trading money that is not coming from their bank account. They're trading money that is coming from your bank account because it's in your bank. So any savings that anyone has in their bank account, they're trading this in Workhorse stock, in any other growth stocks that are highly volatile but easy to take profits out of because it's simple. Speculators in this market are causing this. YouTubers are creating this phenomenon of, oh, buy now, buy now, buy now, buy now. Everyone buys at the height after the moves have happened, and then Wall Street's selling when the news is hyped. So what's that story? Buy the rumor and sell the news, right? That's what's happening. So Wall Street is selling the news and you're buying the news, and they are buying the rumor and you're selling in the rumor. So you're losing, they're winning, right? So that's fine there. We've had a look at Workhorse. We've seen now what they can do. Now let's go back, and I'm just going to show you this because this is a historical perspective on what has happened and why it has happened. Tesla. Let's have a look at Tesla. Okay, so what have we got? March 2013. Does that look very similar? Does that look similar to Workhorse? Maybe a slight more of an uptrend. Maybe it's a better company. Maybe there was a little bit more hype around it, but it's slightly grown. So if you had bought back here at $3.29, and before this move I'm going to show you there, it's $7 move. So they've nearly doubled in a, 1 year period. So June 10 to February 13. In a 3 year period, you've doubled your money if you bought in early, right? Great. But no, we're not talking about that. We're talking about these volatile moves, right? So once again, first move in Tesla wasn't as quick as Workhorse. The whole SPAC thing wasn't as big back then, or the whole real growth stock and the Robinhood and the pandemic thing wasn't as big back then. But 141 bars, you bought in it, when was it? $7.57, and you could have sold at, what do we get? $39 at a $424 profit. So one big move, one short time frame. 3 months time frame, just over 3 months. You could have taken a good chunk of 3x profit, right? So now let's have a look at the next move. So you've sold, then you go, all right, down, 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 and then we buy in again for the next swing, and we've got another 120% profit. Woohoo! And then Wall Street's playing this game again with their money, and they're like going, oh, and we've sold, buy again, another 57% profit. You get this idea. So then it sells off again. Somewhere down here, let's just put it in the middle of that run there. It's another 48% profit. Oh my goodness. And then what have we got? Another big dip here. You're a trader and you see this happening and you're like 88% profit. It goes on and on and on. And so we're talking about these low cap stocks, early stage IPOs, early stage companies where things are really happening in their business. People see things and the hype is that they will do something in the future. And there's upswings, downswings, upswings, downswings, upswings, downswings, upswings, downswings, upswings, downswings, right? Now, what we want to look at really is that this thing has happened, and Wall Street's playing those ups and downs, and Workhorses in those early stages. I think we look back and we did 4 of those swings. Now we can see that over let's do a measure over a, and go over here, over a couple of year period, this up down up down up down up down up down up down has happened in Tesla. Now yes, if you had bought at $5 and at any point during this, you know, you could have taken some fat juicy profits, but what would have happened during that time? You're thinking, I only have a little bit of money. You've got bills coming in, you've got bills, you know, you've got expenses, you've got things you want to buy, you've got people around you that are saying, hey, this is a better thing, you've got the stock market doing other things in other areas. You want to be in and out in your mind, but yet you're thinking, I'm a long-term investor, I want to hold this stock forever, and I'm looking back on, you know, Google stock, or I'm looking back on a stock that if you bought it then and you sold it then, you would have this much money. That is such a linear view of the world. That is such a view of like, if I had $10,000 spare and just put it there and forgot about it, this amazing thing would happen. That's not the case. That's not the way we humans think, and that's why the stock market goes like this, because this is like, I'm happy, I'm sad, I'm happy, I'm sad, I'm happy, I'm sad, I'm happy, I'm sad, I'm happy, I'm sad. This is an emotional roller coaster, just like the human life. So our YouTubers out there are posting videos because they're making money out of these videos. So whether it's good or bad, they're hyping up something that is tapping into your mentality, whether you're happy or sad. Buy now, sell now, buy now, sell now, sell, buy, sell. This is the game they're playing. But what I'm trying to tell you is that you could avoid this whole 2-3 year period of up and down, one, by swing trading it. And if you're not a swing trader, just get out now and wait until the swing trading is finished. And wait till all this volatility has gone out of the market and the deepest, darkest, saddest depression happens, and when everyone has forgotten about the stock and no one's talking about it anymore, and it goes to the ultimate bottom and you've saved all of your pennies, what do? You buy in. So you buy in at $34, which, and if we draw a long-term line, horizontal line at this point here, that's well below the average of all this swing trading that was happening years upon years ago. Now, it's well below the swing trading that happened in the last year, and yes, you could have been sucked into that and gone, oh, well, at that point I was up there, but they are unrealized gains. Now we're talking about despair, the despair of the stock market. Now, this is what happens here on the Tesla chart, so around the 32, and let's just even average it up a bit and say 37. At 37, what happened? And we're talking about, this started around the 3rd of June 2019, right? Go up, and we go up, and there was a little dip there, but we're just holding. Now we're being a long-term investor. We go up, we go up, we go up, and we go up, right? And what happens? We went right up there. I had to scroll so far up to $497. So what was it from? It was from $37 up to $497. Now what is the percentage gain on that? That is a 1,242% gain in this stock over a 318 bar period or a 460 day period. So in a year and a half, or less, a year and a quarter, we've gained 1,242, but in, let's have a look here, in a 3, 4, 5, 6 year period, we've gained 950%, right? So you can sit in here, you can sit in this space, you can be a Workhorse investor, you can be a DPHC investor, you can be an LCA investor, you can be whatever you want. You can play all the SPACs you like and buy and hold and buy and hold and hope. Buy and hope, like Rich Dad says. Have the hopium. I'm buying this one low because it's going to go up. But fundamentally you're going, yeah, this is a good play, you know. The world could take on this product. The world could buy Tesla cars. Like right here you're going, electric cars, oh, it's a big play, but it's a rewarding play. You know, you probably know that it's going to do that big move, but you don't know when, you don't know why. The market is not ready for it. So that's why you only get your 950% return over, what is it, 2,122 days. You do the maths. That's a lot of years. That's like 6 years. Whereas you go back over here, a year and a bit period, you've got a 12,000% gain. So ignore this hype and buy this reality, which is the market going, we want this stock right now. We want this stock right now. Now, go back to Workhorse. That hasn't happened yet. That hasn't happened yet. We're just in the infancy of that. What are we? We're in a 133-day period. So let's go back to Tesla. What did they do in 133 days? 133 days, we are at 160%. So we are right here. Workhorse is right here in the life of a Tesla. So what have we got? Up, down, up, down, up, down, up, down, up, down, up, down, up, down. So there's a journey there, and that is why I sold my Workhorse, and that's why I sold my Diamond Peak Holdings Corporation, and that's why I sold my Lancandia, because the reality is that the market hasn't caught up with the reality of the fact that these companies will be great companies, and I will buy back into these companies in a year or two's time when things have stabilized a bit and when the depression comes and when everyone's totally forgotten about them and their balance sheets are actually saying, boom, our exponential growth is going to happen. So then therefore the exponential growth will happen in the stock market, right? Cool. I'm just going to go over to DPCH. Once again, very linked to Workhorse. We've got a 42%. We've got 138%, we've got a 35%, we've got a 25%. So once again, similar stocks, and you can go through all of your growth stocks, all of your early stage growth stocks, all of your SPAC stocks, HYLN, even worse than these stocks. They've gone up, down, Nikola, even worse. All these stocks are doing these crazy things because they're being manipulated by the market. So ask yourself, do you want to sit there and get sucked into this, or do you want to swing it and actually make money out of it and still have the same position at the end of this play that you would have in that parabolic move? Or do you just want to get out altogether and make some money, or do something else, so that when all of this play is played out, you can actually buy in at a decent price and make massive profits for the long term in 1 to 5 years, right? So I'm going to go over to a little calculation that I'm going to do for you, just to really get you to understand why I sold Workhorse, DHCP and LCA. Now, I think I might have said at the start, Workhorse I sold at about 30% profit. So I took a bit of money out of that. DHCP I sold at a loss. I lost about 20%. And LCA I sold at a loss, and I lost about 20% as well. So in this whole thing that I did, which I sold all these things to do something else, which I'll lead into in a moment, and what I bought with that money is another story. But the reason I'm just telling you that I'm not telling you this as a swing trader. I'm telling you this as somebody that is willing to make a move to get out of this volatility so it doesn't affect my mindset as an investor. Because what I want to do with my money is start businesses and buy things that are actually going to make money for me, that are going to make passive income for me. So I'm looking at this as a holistic investor, as a rich dad investor, so that we can actually set up a life term of income, not just these stocks that we can buy and hold and sell for a big profit in the future and pay a lot of tax on, right? Let's say, and we'll just do a very simple calculation on Workhorse, right? So if I was to have bought 100 shares of Workhorse at $5, so we go 100 times by $5, and that equals $500, right? Now, on that first move, when we went up to about, let's say we went up to about $20, but let's be conservative, and we saw it happening, and we came back down and we sold at 15. So we sell at 15, and which equals about $1,000 in profit. Now that's a pretty good profit, right? We put $500 in the stock market and we got about $1,000. And if we just go back to the graph there and yeah, so what is that in a 19-day period? And like I say, even if we sold somewhere on the way down there, 15, well past realizing, even if we sold in the fear zone or the FOMO selling out zone, we've still made a fair chunk of profit, right? So we've made $1,000, right? So what do we do next? We're a swing trader, we're in Wall Street, or we understand the way Wall Street works. We go and invest $1,000 of our money. So we've saved 500 of our profits. We've invested $1,000 of our original kind of total sum at $13. And so we get 76 shares. All right. And then we sell at the next kind of little peak at around $30. So we sell at $30. Right? And so in that move we get $1,300 profit, right? And check me in the maths on here. This is just a rough calculation. We could buy at the very bottoms and sell at the very highs and make a lot more profit, but I'm just kind of doing rough estimates of like near the top, near the bottom of each of these swings. So then the next move we do is we invest at what have we got? We invest $1,500 at let's say at a $21 buy-in, because that's the next dip, and then we sell at 30 again, because that's where it swung to round about, maybe a little bit above, but we've sold in and around that $30 mark again, and we've made $640 profit. Now, straight away, our profit's a little bit lower that time. Wall Street has lost interest. The big swings are out of there. People have moved on to the next things. So, straight away, we're seeing we've got $1,000 profit, $1,300 profit, and then $640 profit. That's a signal there, right? So, profit, bigger profit, littler profit, right? So 3 swing trades and we're going, all right, so there's not as much going on here. I'm not getting as much bang for my buck. So what am I going to do? I'm going to buy my original 100 shares, and I'm going to buy them at the next dip, which was $18, because everyone has walked away and it's kind of retraced back to kind of a fair value for what it is. It's a growth company with no profit. $18 is a fair value for that company, right? It's well above what it is actually worth in sales and the fundamental analysis, right? So we're going to buy that at, and that is our $1,800. And this is all assuming that you're doing this on the no commission platforms that are out there. I'm sure we're all on them. And so now you have your original shares. So you have your original shares, and you have around, and these are just roughly $600 in profit. You have $1,600 in profit, and I'm in Ireland. I'm in Aussie, but I'm in Ireland, so I'm going to say at a 33% capital gains, and this is if we're doing everything by the book. This is not even thinking into the idea that Wall Street isn't paying tax, because they're all doing through company structures where they can reinvest pre-tax profits to make losses or do whatever they want, right? So as an individual at-home investor, I've made my $1,600 in profit. I pay my $957 in tax. This is all, American dollars right now. And I invest that. Then I invest that into a good value dividend stock. Right? So what have I done? I've, as opposed to buying and holding and going through these ups and downs and going, oh, woe is me, everyone's making all this money from swing trading, and Wall Street's doing all these things, and there's short sellers and there's YouTubers saying buy, sell, buy, sell. I've actually played this game, and I've actually ridden the journeys and made some profits and understood what's going, the ups and downs. I've walked away with $600,000 profit, my original allocation of shares, which is 100, and I have had $600 to invest in a good value dividend stock that will pay me cash flow in the future. We are looking at now, a real scenario that, is fake or not fake, but the reality is that if your YouTuber saying, I'm a long-term investor and I've bought this stock low and I'm going to hold and, I'm buying more on the dips, that's great if you've got high cash flow. But what if you don't have high cash flow? What if you only have, your $10,000 savings, which you're investing, and your net ability to invest on a day-to-day basis is like 50 quid a week? You can't play this game like the YouTuber with $10,000 coming in a month. You can't play that same game as them of buying the dips and just growing your portfolio and buying the dips and buying the dips and buying the dips and holding and buying this next thing and doing what you want with your money, because you can't. You're like someone like me. You work a full-time job and you have very little to invest. So whatever you do have invest, you've got to make it work for you. And this is an example of how I could have made that invest for me. Now, I don't want to play this game. I do not want to play this day trading game with a company like Workhorse. One, because it's happened, and two, because the profit margins aren't really there. Now, if I was to be a Wall Street investor and have no tax, let's have a look at that scenario, right? So, what have we got here? So they could add in larger numbers, right? So Wall Street can play with big numbers, right? So let's say even, we'll use slightly bigger numbers. So 5,000 was our initial investment. So 5,000, and we would have got, let's say 1,000 shares, right? So, but playing that whole journey we just did then, our net profit would be $6,000 in under 6 months. Now, and that's even better, right? So if we had played this game, like a Wall Street investor, without the benefits, and invested our initial $5,000, we would have now had a $6,000 investment to put into a good value growth stock. This is how Wall Street plays these stocks. This is how they swing them. They make a lot of money out of other people's money. That's the key word, is other people's money. Now, the other thing is these YouTubers will tell you that Kathy Woods from ARK Invest is buying Workhorse on the dip. She's buying them on the highs. They just have an investing plan. They are investing 1 to 2 to 3% to 5% of an entire portfolio on this company like Workhorse, because they believe in that long-term future, because they believe it will be the next Tesla. So they're just happy to have that there for all their other investors that want to passively put their money into their growth portfolio and have that grow up. Because they've got stocks that are going up and down all over the place, but in general their whole portfolio of 23, 32 stocks is going up because they're all growth stocks, right? And she's seeing 50, 60, 70% per year in her portfolios going up, in her ETFs, right? So that's a great thing. That's a bullish sign for these stocks long term. If you just have the money and you don't need it, you can just put it in there and forget about it. But if you do need your money and you do need to work it for you quickly because you have a 1-year plan or a 5-year plan and you need to get some of this cash out of the market quickly at a profit, this is what you do. You swing trade, and that's why people are swing trading it. That's why people are playing SPACs specifically to swing trade them and make money. Even after you've paid your capital gains tax, you're making money, right? You're making more money than you would have and less emotional turmoil, right? So that is the play, right? Now, what did I do with my money, right? So I sold a bunch of shares. I think I had 50 Workhorse and 20 Diamond Peak, and I had 20 LCA, right? And I sold a bit of a profit and a bit of a loss, right? So I had a little bit of cash there, right? So I had a little bit of cash put back into my portfolio. What did I do? What did I do with that money? Now, I went across to companies like RIOT blockchain. Now, once again, it's doing the same thing, up, down, up, down. Now, right now you might think of me as a hypocrite, right? Why is he selling all of his growth stocks to buy another growth stock? Well, you need to understand the market, and the market is shifting into a really, really bull run for cryptocurrency, right? That's why my channel is called Crypto Exit Plan, right? It's like, what am I going to do with my money after crypto goes on this next bull run? I'm looking at my exit plan for that. I'm already planning that, right? So straight away, we've got a local high of 448. We've got a previous high. So the next resistance level after it breaks through this local high is $6. The next resistance level is $8.41. The next resistance is $9.62 up to this $44 mark. So we have got potential 10x returns in this market right now from historical evidence. If you go back to Workhorse, there is no historical 10x returns to be had. This is all price discovery. The market is making the rules, right? But we go back to a RIOT, and there is historical evidence that during the last bull run in December of 2017, this stock peaked. So yes, there will be manipulation in this stock, but it will be to the most extreme extent of the retail FOMO that I'm going to be able to sell at 40, 50, 60, 70, maybe 80, because this actual move will end up being so inferior in the long-term growth of this company. Because what are they doing? They aren't selling this idea of an electric car or an electric truck or something that in 10 years time the world will take a massive market share away from the combustible engine market. You know, this is all kind of, you know, you need the world to kind of figure this out. This is the idea that the world right now wants quick money, and the world right now is seeing Bitcoin move, and the world right now is going, I'm going to put my savings into Bitcoin as opposed to in a bank. So all that money from banking, all that money in bank accounts that is earning like 1% interest or 0% interest, or you're nearly paying the banks, is going to be shifting into Bitcoin. These guys mine Bitcoin. These guys are buying more computers that mine Bitcoin. They mine more Bitcoin than they used to mine back here. The price of their Bitcoin goes up. Their stocks of Bitcoin goes up. The money they get for selling their Bitcoin goes up. It is such a simple business model. You know, mine Bitcoin, it goes up in price, you sell it. It's like a gold miner, right? But without all the fucking mills and without all the things that, you know, the environmental restrictions, and without all the governmental borderal restrictions, right? It's like you can mine Bitcoin wherever you are and sell it wherever you want. And just pay your taxes, right? You just got to pay your taxes in whichever jurisdiction you make the profits, right? So there's no rules. You know, all you got to think about is how can I get the cheapest electricity? How can I lower the electricity consumption? Maybe moving to a colder country so I don't need to spend as much on cooling, right? So this is what these companies are doing. So you got to zoom out here and going, if I bought these guys at $2.50, you know, even if it's during this volatility, what's going to happen next? Whereas if you bought Workhorse at $2.50, yeah, you're going to spend a lot of time going sideways from right now. But in this next bull market, and where, you know, there's evidence on the Bitcoin chart that we're curving around into the next bull market, so it is very, very quickly going to end up at 44. Marathon Patent Group, the same situation. Really big spike here. You know, massive manipulation going on there. Probably was just a startup, but if we look back here, $150. You know, we're buying it now down around the 10. Geez, not even. What are we buying it now? We're buying it at $293. So we've got this historical evidence. 27, 50, 147. There is a possibility that this stock will go to the moon, right? Argo blockchain, if you can buy on the London Stock Exchange. Very new company, but once again, historic price evidence. That was probably post bull run. So if you look back here, they were probably due to be way up. You can buy this for, what is it, 7 pence now? You know, put €1,000 or £1,000 into that, right? You're going to get a lot of bang for buck in the next year if you put your money into that. A lot more than you'll get from Candia or Diamond Peak or Workhorse, right? They've actually got to build things and sell them. This is cryptocurrency mining. This is something that is like a massive wealth transfer of money. So, you know, you got to ask yourself, is that if you're going to have your money in growth stocks, Are you invested in growth stocks are you invested in growth stocks like Workhorse that, yes, they've had great growth, but the reality is that are they able to produce products that sell a lot of money, and how quickly can they get those products to market? Or are you going to invest in Bitcoin or something like that, or a company that, if you don't want to invest in Bitcoin directly, a company that mines that Bitcoin that is already produced, they're just digging it out of the ground or digging it out of the internet and selling it. Bang, bang. Find a Bitcoin, I sell it for 13,000. I find another Bitcoin, I sell it for 13,500. Find another Bitcoin, I sell it for 14,000. This price is going up, it goes down, it goes up, goes down. But the reality is that Bitcoin will hit its 17,000 mark. It will hit its 20,000 mark. It's going up in a long-term trend. It is becoming more scarce like gold. There is more institutional investors that are buying into it. There more retail FOMO. PayPal's getting into it. Square's into it. Everybody's getting into Bitcoin. Let's just rethink the way we're playing the stock market, and don't play it like everyone else that has just got a Robinhood account or just got a 212 account and thinks that they can make it rich instantly. Because that's what I was like about 5 minutes ago. I was like, oh, I'm seeing these things that are going to happen, and if I buy low and sell high, I'm going to be rich. That ain't going to happen. That ain't going to happen. There is no instant success. You need to actually have a strategy, and you need to have an exit plan. You need to have a reason why you want money to make money for you. So that's where we're at. Let's leave it there. Listen, subscribe, do what you want. I'm happy just to tell the real story right here, so come on.